Otsu, and this is Observations with Otsu, as you might imagine. So, I'm glad you're here. Have a good morning. I hope your things are going well. It's morning for me here, and I hope you had a good weekend as well. So, we're going to look at Bitcoin and Ethereum today. It's pretty much par for the course as every video, and I might look at a few extra alts too. I want to look at Binance Coin again, and that's pretty much what I did last week. But I kind of want to look at it some more because I think it's a good example of I don't know. It has a little bit of a difference versus the market. Like I'm slightly bullish on Bitcoin. I'm about neutral with Ethereum, but I am very bearish on Binance, which is very different for me as far as an out. Like usually, I can kind of gauge. Well, they all look a little bullish or bearish to some extent, but like I'm having very big differences between the different charts right now, and that's unusual. So I kind of want to cover that. All right, so first things first with Bitcoin, as we do usually, we kind of do a 1 week analysis, kind of work our way down. I kind of want to go up a little bit higher today, and let's just see what we got going on for the month. And this is very interesting. I don't normally look at the month as far as video charts. I tend to do it on my own, and one of the reasons is a lot of people really, in my opinion, overanalyze the monthly charts. They look at it like, oh, this is, gonna be a big month, gonna be a bad month, but they kind of overanalyze it as far as like price dictates this so well, and we can see a few different things. I'm just gonna erase this for now. Couple things on it. Sorry if I stutter a couple times. I'm kind of having a slow start, but really right here there was nothing. I mean, first of all, this was 2017, 2018, so this is a long ways away. Like, people don't actively look at monthly charts as much as you would like Twitter to think that they do, and so there's no real way to analyze this from a liquidity perspective. I would have done this years ago, and then I would have gauged this because I always do the top 2 wicks. And this is something I teach in the academy, so I won't get into the details behind it, but I typically assess this from the first 2 wicks of an order block. Even though this isn't technically an order block, this is more of just like a triangularized pattern. I still would compute that way. And again, I explain that in the academy, why I do that, what's the reasoning behind. It's not just something I decided to do or something that is good that I just got lucky doing with. I learned how to do this, why that's a good thing to do. So anyway, this is how I would form it even before we would have got to this point. And so this actually was a key reason why I also bought. I actually bought in this area, but once we got above here, I realized that my buy-in was a good buy-in because it went away from here, caused a major deviation on the monthly. But we got a few things here. We got the biggest thing I see is the breakdown of the RSI, and that's very key. But other than that, I do see the divergence that we had, and that's pretty much gone by now. The past 2 months have been downside, and it's to be expected. Again, the analysis on the monthly is very low in my opinion compared to other months. People tend to overanalyze the monthly, and honestly, I think they underanalyze the weekly and even other time frames. But we have a bullish wedge on the Aroon, and so that's gonna mimic really the only really example we have is right here, and so this really started roughly right here, and then it stopped here at this cross. So we kind of have the same thing going on. And so, unfortunately, it did start, it wedged up briefly, and that's also why we got that impulse. But then it kind of reset, so that kind of sucks. So we're kind of working with this instead. So the patterns don't exactly match up the way that I would like them to, but we still have some time. We still got, let's see, 49 divided by 7, so we got like 7 or 8 months to figure that out. So we got some time, and that's why a lot of people think the rest of this year is not going to be really that good. as far as price action, and I tend to agree. I do think things are going to be bullish overall. I just don't think they're going to be hyper bullish as you would expect, and I really think we need to kind of prepare for that. It's always wise. I don't want to get into it. Usually my rant videos are later in the week, Wednesday, Thursdays, but I mean, I've seen people online get wasted, get liquidated on that big red day last week on one trade basically, and on one exchange. They had all their money on one exchange and one portfolio, and I don't really want to rant into that, but that's just the most unwise thing that you could possibly do. So I don't say that to knock them down. I say that for your benefit, to prevent that kind of stuff from happening, because it can happen to anybody. It can happen. I've seen it happen to really good traders, really smart people. I mean, I've seen quite a bit in my 6 years here in crypto. So anyway, that's what I see on the monthly. Again, I want to preface, I spent a lot of time on this, but don't overanalyze this and think that we're going to go down just because the monthly told you to. So overall, that's kind of what I see on the monthly. Let's zoom back down to the weekly. And this is something that I did address in the video yesterday. But the main thing I see, like I said, is this double top. Here's one, here's two, and I liquidity. I put a block here on the liquidity area, which is just basically a fancy word for wicks, wick area. Whenever you see a series of wicks, that is liquidity showing itself, and that's something that a lot of people don't tend to even realize. You don't need some fancy software spending $200 a month telling you where liquidity zones are. Aroon tells me that. Again, that's something in the academy. I teach Aroon based liquidity in the academy. And if you, but the too long didn't watch or too long didn't sign up, whatever, is that wicks are a big part of that. Aroon is based off of wicks, actually, in a certain sense. Again, lots of detail, can't share it to you. That's why I have the academy anyway. But wicks are critical for these zones, and so that's why I use them to retest. So we have not technically retested. We kind of probably did a little bit here. And then we do have the catch here on the 50. This technically is on the weekly is clean. This is some of the most cleanest TA that I have seen. This is textbook TA that you learn on your first 3 months after you bought your meme coin and it went up 100% and you're excited to get more. This is what you start learning, right? This is textbook to me. The fact that people are thinking doom and gloom right here is very shocking to me, because we had the double. We had not just one, we had two. We had a double top expansion. This is a bullish engulfing pattern, so it needs to retest. When engulfing patterns show up, they eventually, this is called a bullish breaker. Some of you guys did like inner circle trading, you might be familiar with that term. I don't call it a breaker, I put a little twist on it anyway. But when you have something like this is a sign that the demand has increased too much, too fast, and so it needs to come back down to retest that point. And so it generally will retest anywhere within this area. Now, most of the time it does not go past this area where the bottom of this block is. And so that's why I only put this one block, because 90 to 95% of the time it stays within this. About 5% it'll touch here and bounce back. Kind of a scam wick, but that's what it is. Overall, very healthy in my opinion. This is very healthy. And it kind of goes, and again, this is why I'm not a macro guy. Again, this is also a rant that I tend to save towards the weekends, or towards Wednesday, Thursday. Get that out of my system, right? So that's why I don't really pay attention to macro as much. And I know I've even had a lot of followers disagree with me on that, and that's okay if you trade that way and you make money. If the most important thing is if you make money. I don't care if you do moon phases, if you spin a bottle. I don't care what you do. Okay, if you make money, good for you. And I really do mean that. I don't mean that sarcastically. A lot of people get messed up with the macro thing. They focus on too much too fast, and it's a very easy way to fall victim to the charts. And a lot of people want to. You see it in videos, and I've said this so many times. And I hope maybe one day I can stop ranting about this, but I see it in movies. People sensationalize movies like Big Short, Margin Call, wear the fancy suits. I saw Trading Places the other day. Really good older movie if you like those kind of movies. Um, but they got the fancy suits. They're walking in all brisk and fast, and they think they're hot shots and all that stuff, wearing all the fancy clothes. They're shouting. They're doing all this stuff. Like it's sensationalized. Like, yes, part of it is real life. Some of that's based off a true story, even like Big Short. But um, a lot of that is entertainment. It's designed to be entertainment. Like, you fall for. And I used to be this way. I used to want to have a suit and tie job. Like, it's you kind of fall for that culture, and so you like the idea of things being fancy, professional, and complicated, and that goes to chart. That leads eventually to charts. You want to look at, oh, what's Bitcoin doing compared to the S&P, compared to gold, what's wheat doing, what's the housing market doing. We're doing all this stuff. Like, you think that you're smart and cool because you're looking into all that, and like, yes, you are doing a lot of work, but you got to realize that what you're trying to do there is what a team does. Okay, you have brokers that, I mean, they have some sense, but generally speaking, they don't do the whole thing. You got some people that execute trades, you got some that research trades, you got quants to do the kind of math for you for that. You have a whole team of people doing that. And generally speaking, if someone is talking to maybe like a more, a boomer or someone closer to retirement about their 401ks, typically they're not doing all the work either. So you got to keep that in mind. And I say all that to say is, you can get lost in the woods trying to figure out all the macro stuff. And that's why I say focus just on technical analysis, honestly. Focus on one or two things that you are doing that you can do right and execute that. And so I say all that to say, we got the we got the CPI, we got all this other crap this week, and honestly, I don't give a crap about it. I'm so tired of dealing with it. I even forget that they happen, and it really is kind of depressing to see nowadays, because have we not learned our lesson for the past year now? We've been focusing on these for a year. They haven't, like, CPIs have basically done nothing long term at all. They really haven't. If you look at the charts, they really haven't. And I've mentioned this before too. We've been in a downtrend ever since. From January, this is 2012 to 2013. We went into complete down move. If you just would have shorted the entire 2022, you would have probably retired. And you obviously can't do that necessarily because you're limited. But do you see what I'm saying? How easy that was for me to say that? It was a downtrend all year. The charts don't reflect that CPI, in my opinion. And you might say, well, so you're zoomed out too far. But isn't that the point? Why should I zoom in to make less money? Do you understand that? Like, why should I zoom in to make less money when I can zoom out, see that we've been a downtrend this whole time for 2022? That's kind of what I'm saying. I'm getting in my rant, so I need to kind of flip the script on this a little bit and switch to TA again. But you see what I'm saying. And so that's kind of what I'm seeing now is like, oh, we got a big week. I saw this with a few big accounts, and they still doing this. And look, I tell you again and again, 2019 and prior, nobody gave a crap about CPI. Nobody cared about CPI. And it's the same thing. People think the housing market's going to crash. It's probably not. I'm not a housing expert, but I don't think it's going to crash here in America because everybody and their mom got a house at 2% interest. Okay? They're not going to sell their house. They don't need to sell their house. Their housing payments are half the size as what you would buy now. So why would they sell unless they need to? Not everybody was given a house at that time either. It's not 2008. I don't want to get into that. I'm not a housing expert anyway, so I just kind of want to move on with that. But my address to this is don't focus on the macro as much as you think you need to. I'm not going to say don't focus on macro, but it's largely unprofitable for most people. And if you can't even figure out what a candle says, you probably shouldn't be looking at bigger things, honestly. So kind of work with the elementary. And honestly, again, I honestly didn't mean to say that to talk about and plug the academy, but the academy, I focus on a lot of basic things in the academy, like things, and that's why I advertise it as a 12-week class only. Like, you learn probably a year and a half's worth of information in 12 weeks. And so that's one reason I bring that up, is because if you don't know the basics, the academy is perfect for that. And I offer discounts. I like older videos I offer for 50% off. Okay, so keep that in mind. If you don't think you can afford, it's like $500 for 3 months, which is actually a little bit on the cheap end compared to the value that I give. I offer 50% off that for older videos. So just something to keep in mind if you want the basics. And one of the big things I do is I look at all different types of analysis, price action, trend, everything, and I look at the best ratio between what has worked successfully, like what can make you the most money, versus what happens often, because there's a lot of things that do happen that can help you, but only happen maybe like once every 2 years. That's not helpful for you, right? So I look at the best ratio between how often a pattern happens and how it historically successful it has been, to kind of focus on the things that can make you more optimized in your trading versus just doing whatever you think you're doing. And so I say that to say it can be trading and all this stuff. It can be very tiresome. You can get lost in the woods with that. You can feel like you're just in the middle of the ocean trying to figure out what you can do. So this helps guide you with that. So anyway, that's enough on the academy side. And anyway, I want to mention this textbook retest. I like this a lot. I honestly think that we probably won't go below 24.3, 24.4. If we do, we got a lot of bigger stuff coming. But the key here is textbook retest on the RSI as well. This is looking pretty good to me, in my opinion. So I just want to mention that. So I'm going to go from there to, I'm going to go take a detour. I knew this video would be longer than I thought. Go to the 4-day. So this is something that I focus on. I like the 4-day a lot. I tend to use the 4-day when I trade. I've told people over and over again, I do something as simple as trading this band on the 4-day. Once it hits blue, I long. Here I longed, stopped out, shorted, longed again. It works. That's what I personally do. I don't necessarily do it every time, but that's what I do. Right now, on the trend, we kind of have the squeeze play, which means we kind of have a little bit of a compression right now. I would expect this to hold. Right now, the bears are still in kind of control of this. We are consolidating here. Overall, not the best sign on the 4-day compared to the weekly, but that's just how it is. Again, still looking for this, and you might have seen on my Twitter, I am looking for a wick down. I think the 4-day kind of tells you that a little bit. I think we could get a wick down here in the middle and then go up from there. Not going to spend too much time on the 4-day though, because that's usually exclusive to my analysis, not necessarily to everyone. So we're on the daily now, and we had a few liquidity zones here. This was kind of a signal that to get out of the market, and we did pump up from that, but then we faded the entirety of that. So again, kind of shows us a little more in detail. One thing I did want to mention, I think, was the div here. There was a div that didn't quite work out, but it didn't seem to kind of flow very well with that. So I would say that that's probably invalidated now, and so that's something to look forward to. Well, I shouldn't say look forward to. It's something that sorry, I said the wrong thing. Something just to keep in mind, because sometimes the divs do invalidate, and that's okay. It happens. That's why I focus more on divs on 2 days and 3 days, because they tend to be a little more accurate. And then when you have something like this, it usually doesn't have to mean, divs don't have to mean straight down. The bearish divs doesn't mean the price is going to nuke, and I kind of dislike that. And the more and more that I have been in the space, the more and more I realize that the average crypto Twitter person is so toxic, not just in how they treat other people, but also how they treat themselves and their analysis. And they just have such a backwards way of thinking, and that's why like I kind of stay away from that. I don't talk degen style, like, because my life is not degen style. Like, I'm not going to be responsible for someone losing their net worth because I make fun of degen, lifestyles, right? So, get your head out of all that, honestly, and I mean this with all well-being. Stop thinking that you're a degenerate loser, okay, and start thinking about how you can improve yourself every day. Because that's one way that you can kind of achieve this. Get better at what you're doing, and make the money that you thought you were going to make, and then you can retire early, or you can do whatever. I'm not saying you can do that or you will do that, but the fact that we have such a massive opportunity in the crypto space to accelerate your plan like that is crazy. So keep that in mind. I don't know. It's a little bothering to me, but anyway, on the daily, I'm kind of ranting as I go, and I apologize. But right here, we kind of see this retest doesn't look so hot on the daily. However, we got kind of the touchdown of this. It really needs to break away from this area. Usually, when you kind of have a fade like this, kind of like a sickle formation, it does tend to go down a little bit. So we'll see. Not exactly looking forward to that. On the 4 hour, whole lot of congestion here. I don't like this price action. This was the Binance, this was the Coinbase. We faded the Coinbase rally, and now we're consolidating above the highs. Usually doesn't end up so hot. So kind of what you want to see ultimately is probably a break of this line. That's not even really a good trend line, honestly. But we need to break that. And so there's nothing really here that says that we can rally from this. Like, this wasn't really a retest. This was just kind of in the middle of nowhere. The only thing that we got going on is something that I showed you on Twitter, is this trend line right here. And so when we get a diagonal with a horizontal, and I've mentioned this, when we get both of those, it tends to be a little more slower because, one, the trend line doesn't want to break based off of... So again, don't think in terms of macro or CPI crap. Think in terms of what market supply and demand will do. The technical analysis is a way to analyze visual supply and demand. So what you see on the chart right now is supply and demand, and what you see right here at the diagonal is a slow loss of demand. But that slow loss of demand, think of it like this. Like, think of demand as like a person, and demand is willing to lose a little bit of itself. Like, is willing to lose a few battles to win the war. So what happens is, this is actually a wedge, right? And so the idea here is that we'll lose demand, but then we'll go straight up and kill the supply. So, or increase of supply, decrease of demand, and eventually that should switch. So that's the idea behind that. That's why you get the diagonal. But what happens is, now you're also combating this with a horizontal demand. So you have, yes, the demand is willing to give up a little bit, but it's not willing to give this up. And so if it gives this up, we're going to tank. So that's kind of the idea, right? We're fighting between a horizontal demand and a diagonal demand. And so that's why I mentioned that we might get kind of a slow bleed this week, or even just a slow price action. We're going to get a chop because there's conflict between the demand on the horizontal and the diagonal. So that's kind of what I see. Ultimately, I think to satisfy both, we could get a touchdown. And if we get a wick down into the blue zone and it reclaims out of the blue zone, in my opinion, that's the sign for me to buy. So that's kind of what I'm looking for. So a lot of high time, a lot of high analysis with that. But you get a rant and you get some analysis on supply and demand. But that's pretty much Bitcoin. I wouldn't really focus on 4-day right now. None of this is really clean to me. I don't like this at all. When you get these little chop zones and then drops, it's a gamble, and I don't like gambling. So I would much rather focus on a bigger chart like this. So, and for my Apex. This is the signal chart that I use for. These are the signals I use for my Apex Academy. It says we are in a downtrend. We've been so since that drop, and that's one reason we retested, but we faded as well because the script thought that wasn't a genuine pump. So anyway, that's been going good. Other than this right here, it's had a pretty good record since almost a year now. So I think yeah. So it's been doing pretty good, I would say, overall. So it's either save some money or made, depending on how you may have used that. So, all right, so that's Bitcoin. I think I spent a little too longer on that than I wanted to. I'm going to go to Ethereum. We'll do Binance, and I think I might just stop at Binance. A lot of time on Bitcoin, but let's go ahead and go to Ethereum. I felt like some of that probably was a little necessary, but that's why I got the videos. So with Ethereum, we're going to go to the weekly. Actually, we'll go ahead and visit the monthly again, since it's something I don't do. I think in the future, maybe I'll reserve this for the beginning of the months and add that in. But we kind of have a similar structure here. We kind of got that flip. Actually, I'll just get rid of that, make it easier. Spend less time doing this. So liquidity gap or liquidity areas right here have a rejection so far on the RSI. So you kind of got that going on. I'm not really sure why this is an alert. Sometimes I just put them on there. So anyway, kind of deviating. Not really what I want to see. But again, don't take too much. I really wouldn't trade directly off of the monthly. I mean, honestly, like once every 5 years or 3 years, something like that. So not much to see. Mainly a downtrend for the entirety of the month, but it's only been like 12 days. So we'll see how that goes. If we go to the weekly, we kind of zoom in. Kind of see this a little bit bigger of a picture. We got that Adam and Eve structure that I've talked about really since, I mean, at least for 5 months, I would say. I kind of discussed it as it was kind of going around here. I kind of discussed this as an idea, and that became reality. Really, the only problem is that we ended up deviating, and I mention this almost every weekly video. We rejected from that, retested below, and now there's no real catch. The thing is like you want things to either catch horizontally on a trend, which you can't do because there's no trend here. You can't just do that because there's no reference point, although there is this wick. I tend not to combine bodies and wicks together. I would like to have at least like if there's three, like two bodies and one wick, or two wicks and one body, one of the two. So you can do something like this. So this is a wick, this is a body, and you can do like so, but that doesn't, kind of has a free fall effect, right? So you could extend this out and kind of go like so. That's a possibility. I don't really like that though, because it kind of takes all year. I would like to wait for it to get pretty significantly far, about end of Q3, beginning of the last quarter, to really think about that. So overall, kind of rejection, free falling so far. We have this kind of inner bar I talked about in the last video. That's a possibility to hold right around here. If it doesn't, I would say that this line would be valid then, the red line, and then I would look for something around 14.5 range. So that's what I see right now, and I can visualize this for you. Probably right here, 1730 or 1681 is probably where I would look for another drop, and that could come tomorrow, that could come next week. Got the protection on the RSI so far, so that looks okay. We could also be right here, but that's already been broken. So this whole area is going to be a little bit of a contest, and again, it could lead to more of a slow week. A lot of people are going to blame that on CPI and things like that, which could be, but those things, in my opinion, get priced in, honestly. It just all works together. And then at this point, this is kind of a weird structure, but I would quantify this into a block. And so your target is the middle, which would be basically 1600. So that's where I would look for a bounce, more stronger bounce at 1600 to, maybe the red line, anywhere on this red line. That's what I would look for. So I think that's pretty self-explanatory other than that. So on the daily, we have the structure. We got this kind of distribution consolidation cluster with the impulse, deviation, more zoomed in, retest failure of the lows. You kind of have this. I was really looking forward to a trend line break of this, and I think you could probably actually makes more sense with this. And this is what I was saying, like 2 bodies and a wick. This is probably close enough that you could count that. I would like to see a trend break of this red line before I see any kind of bullish momentum. If this breaks, and usually when you get a down diagonal like this and a break of that, it tends to rally. So that's what I would look for, but we don't have that right now at all. And so you kind of see this other trend structure. You can kind of put this together. I mean, that kind of fits in the smaller context of things. So that it's a possibility. I think that's possible. Another option is to look right here. And I don't really mean to focus on trend lines today, but it's just kind of happened. And typically when we get a double trend cross like this, it's usually a good sign. In this case, if you're bullish, it's a good sign that we might bounce from there. 2 is better than none, or 2 is better than 1 in that case. So we'll see how that goes. I think overall, I'm about partially, again, I'm a little more neutral on Ethereum. Could go several different ways. On the 4 hour, I don't really like this consolidation period. Kind of a sickle shaped fade, and then another rounded bottom. Like, not the rounded bottom that I look for, but like kind of a TP formation. That's kind of what I call it in my head. Usually that's a sign of continuation downward. So overall, on the 4 hour, we kind of want this consolidation area to hold, and so far it is. But after that, there's not much left until maybe the 1500s area. So you got lots of conflicting things. Well, we do have this is here as well. So maybe this will hold. It's definitely possible. So we'll see. I think overall, again, I'm neutral on this. Not really longing or shorting Ethereum. I'm much more interested in longing Bitcoin with more size, but still being calculated about it versus Ethereum. And so after this, so I'm going to switch to Binance, kind of cover that for a couple minutes, and then we'll end the video. All right, so going to Binance, and I wanted to cover this because, one, you got all the SEC stuff, and the reaction is not really good, right? I think, and we see this a lot with, and we even go back to like XRP. I've mentioned this before a few different times. I've mentioned XRP a lot in my Telegram channel. Long time ago. It's been probably 4 years since I've talked about that, but or however long that's been. But the SEC has a way to targeting people, and in doing so creates kind of like this really weird phase where people aren't really bullish or bearish on it. Like, it's like a death of a thousand cuts kind of thing. And so the idea is like people get disinterested. And so I feel like that's kind of the same with Coinbase. Now with Binance, a little bit different because I think they're more on the hot seat, and this kind of reflects with their chart. So for example, large impulse. This is kind of when they launched a lot of things, their NFTs, their smart chain, things like that. So they kind of went off with this, and they did pretty well. I was really concerned about this area when it first happened, actually, and we're kind of retesting that same area now. It's 3 years in the making, and unfortunately, the thing is, sometimes you have to wait 3 years for these, and that's painstakingly like slow. But that's just something you keep in mind. Like, sometimes you don't get an answer for price action for 1, 2, 3 years, even 5 years. So that's something to keep in mind. But this, trading rules suggest that this is a problem. Because we got the impulse, we didn't get any kind of retest or nothing like that. It should retest. Now, sometimes they don't. I'll be honest with you. Sometimes they don't retest. Nothing. The hardest part about trading is nothing's really 100% accurate. And so you're working with a combination of objective rules with subjective means. You kind of got to work with both. And that's why some people that you think are good traders might not. You might think that they're little scammy, and I'm not saying they are or they aren't. I'm saying like the way that you're viewing that might be different. And so, I mean, there's people that I haven't understood, and it took me a while to understand them. But at the same time, there are a lot of scammers out there. So don't trust everybody, obviously. But when it comes to TA, nothing's 100%. Unfortunately, you gotta think objectively and subjectively at the same time. So there's a chance that this may not. There's a chance that this may not retest, but typically it does. And so unfortunately, that would mean we would go down to about 46, about anywhere in the 40s. But this needs to hold. I would be comfortable letting this go if this would reclaim pretty soon. And so I'd be even more comfortable if we got back to 350. But I remember when, maybe we should go back to, we should go to Binance chart. I mean, I remember trading Bitcoin, or I remember trading Binance Coin at $5. And so I remember, it's not even on the chart barely anymore, but I remember, I think it was on another exchange or something that doesn't exist no more, but it's interesting to think that this is just gone now, right? So anyway, let me get rid of that and do this line, so this will be better. So yeah, we got 37 to 40, so let's go ahead and pump that up. So yeah, so this is what I'm looking at in general. We didn't retest the top of this line at 45.8, so that's my concern. We did retest this area, so that actually does give me a little more confidence that we may not have to retest it, but we'll see. The evidence still suggests TA wise that we should, and it's been a concern of mine for a while, but we need to reclaim this 241. That's my thing. I'm not bullish on this at all. I'm not bullish on the ecosystem. I'm not bullish on the smart chain that's attached to. I'm not bullish on the projects that are in it. Most of the projects, I mean, you think crypto is a scam, like, or coins are scammy and accounts are scammy, like Binance Smart Chain is like, that's where they go even worse. And so I honestly can't think of one. I literally cannot think of one single coin on Binance chain that is successful that did not start on Ethereum first. Just saying. So it is what it is. I don't feel a need to use the chain, do any of that stuff. It's one of the harder chains to adopt anyway. So anyway, that's beside the point. This is TA stuff. I want to see this reclaim 241, 243. So anyway, that's the video. I hope you enjoy it. Went a little long, so I apologize. Kind of in between a few things as well. So if you like it, please like, subscribe, follow me on Twitter, especially. I'm trying to get to 10,000. I've got I've got some groups coming. I got the Apex Academy. I got an Apex Academy group in addition to a class, course, class, whatever. A lot of people make fun of having paid stuff. That's not how I see it. It's more of, I'm trying to help you accelerate your education. It's not like a paid signal group, right? It's more of a, if you want to learn how to trade and do it really quickly, I have that offering for you. And the only real reason I pay is, it's, my time is valuable. So if you respect that, then that's okay. If not, it's okay too. I've got plenty of free resources as well. So I'm not here to, do any of that stuff. So if you like that, you can check that on my Twitter. I'll probably link it here on YouTube. Anyway, all that being said, hope you enjoyed the video. Wednesday, I'm going to have a crypto coffee video where we're going to cover more altcoins instead of Bitcoin, Ethereum. And then Thursday, I'm going to have a tactical trading video, part 3. I'm going to switch it up, and I'm going to talk more about what is bullish price action, what is bearish price action. Because a lot of people get mixed up. A lot of people interpret things as if you're bullish on something that you should be buying. That's not necessarily true. So I want to get into that. That's going to be another video. Anyway, I've talked long enough, I'm sure. Hope you enjoyed it. If you stayed this long, let me know what you think, and have a good day.